Hello students, welcome to the lectures of corporate laws and compliances. I am Priyanka Srivastava. I am going to teach you today the chapter 4 under Companies Act 2013, which is named as dividends. So this dividend is basically not a lengthy chapter. It will take around 2 to 3 lectures to complete this particular chapter, and it's not that difficult also, and it is quite interesting, and it's not that tough also. So if you go with me, then this chapter will be going to get finished. Even you are going to remember this chapter only after the after the completion of this particular lectures. And once you revise all these lectures thoroughly, you will be done with this chapter, and you just need to revise it at the time of examination. I can assure you, you will be done with this chapter in by following these simple steps only. You don't need to do anything extra beyond this, and also the notes that I am providing is sufficient for you to crack this exam, okay, and for your knowledge as well. So I don't think you need to go any further. Only the thing is that you might need to check some notification that may come periodically for this subject or for any subject. But again, for that also you don't need to take so much tension, because I am there for you. If there is any notification come, any amendment come, then I'll definitely arrange the lectures in the future date whenever such notification, such amendment comes. So before examination, I'm going to conduct an amendment series for you also. So you don't need to worry about that what happens if any changes come later on. So it will not be like that. And so without taking any tension, just focus on wherever you are studying right now. Okay, and don't take tension about that क्या होगा अगर changes हो गए, amendment हो गया. So that will not be an issue, because I am there for you, so you don't have to worry about anything. Okay, and also I'm explaining you in such a way that even after completion of the classes and the subscription or your viewership, you will be in a position that if you get the lectures by the notes by your own, or you get a notification, you can understand by yourself also. So nothing to worry at all. Okay, and otherwise till the time you are subscribed with me, I am there for each and everything. You are not required to take any tensions. Okay, so without wasting any time, let's begin with the chapter named as dividends. Now, what is dividend? How the dividends are declared, and what are the procedure for declaring the dividend? Okay, what if the dividend declared is not claimed by the shareholders? Then all these things we're going to discuss today. And there is an account name as IEPF account. That is basically it's not actually an account, it's IEPF, Investor Education and Protection Fund. In the notes, I'll delete this word account, and right now please don't write this. Okay, it's only IEPF. And then section 127 is regarding penalty if you does the non-compliance in distribution of dividend. Now let's start with the first topic, that is profits and ascertainment of divisible profit. Now before starting anything, let us understand the concept of dividends. Basically, we all know that shareholders are owner of the company. They purchase share in the company. They make investment in the company. Okay, so obviously on every investment there should be a return. And what kind of return the shareholder gets on their share is dividends. So if I talk about this, shareholders are of two types: equity and preference shareholder. Both of them gets dividend. Okay. The difference is that equity shareholders get dividend after the dividend is paid to preference shareholder, and preference shareholder gets the dividend in preference of equity shareholder. Suppose there is 2 lakh profit of the company, and preference shareholder are promised to pay 10% dividend every year. So suppose preference share that was issued was of 20 lakh. Okay. So on 20 lakh, 10% of 20 lakh is 2 lakh. So their dividend on preference share is 2 lakh. The amount which is left with company is 0. So equity shareholder will not get any dividend, as the after the payment of the dividend to preference shareholder there is no surplus left. So basically preference shareholder gets the preference in the payment of dividend than the equity ones, and dividend is paid on the profit of the company, out of the profit of the company. Okay. And this profit, how you will going to calculate this profit and all these things we are going to study right now. So basically, just for your concept purpose, understand that shareholders does the investment in the company, so they will get a return on that investment, and that return is named as dividend. And to preference shareholder, it is compulsory to give them the dividend as promised to them when at the time of issue. But for equity, it is not at all like compulsion to give the dividend to equity. Now you will say me that what is the benefit to hold an equity share, then why the people take the equity share? Then I need to tell you this, that this is equity shareholder who hold like 10 lakh equity shares in the company, 10 lakh rupees. Okay. So what happened that at the time, if the profit is, suppose in the same case, profit is 20 lakh, and preference shares will still be getting only 2 lakh rupees, as they have promised for only 10%, not more than that. So the profit remains profit available for equity shareholders. One second. Profit available for equity shareholder. Okay. So this is 18 lakh. So either company can distribute whole 18 lakh rupees to shareholder as a dividend, or company can retain at least 8 lakh and keep 10 lakh as a dividend and 8 lakh as a retained earning. What is retained earning? It is the earning which the company used for the objects of the, for promoting the objects of the company, for basically for it is kept in the company for the future purpose. So like you can now compare that preference share is getting only 2 lakh and now equity is getting 10 lakh. So it is not the case in every time. Most of the time equity shareholder gets more percentage of like return on their income. So it's not like that. They get lots of benefit, they get bonus shares, they get right shares. So there are n number of benefits that are given to equity shareholders. So right now we are just studying the chapter name as dividend. So we need to focus on the word dividend only. So equity shareholder or preference shareholder both gets dividend in the company. This is what the fact that you should know right now. Okay. Now dividend is given out of what? Out of the, you can note this, I am clearing out. Okay. I hope you have done. Okay. Pause it, note it. Okay. Now This dividend is given out of profit. Okay, it is given out of profit of out of current year profit of the company. Okay, current year or maybe previous year profit of the company, and it can be also given out of free reserve. There is a part of profit that can be transferred to a free reserve or general reserve, which can be used for the amount of that free reserve can be used for the distribution of dividend when the company is not having adequate profit to distribute the dividend. But these things are at the discretion of board of directors of the company. Okay. So, yeah, let us see this. Profit and ascertainment of divisible profit. It says maximization of shareholder wealth is one of the objectives of any business. So, we want to maximize, we want to increase the wealth of the shareholder. Okay, and dividend in the literal terms means the profit of the company which is not retained in the business and it is distributed amongst the shareholder in proportion to the amount paid up on the shares held by them. What does this mean? It says, basically, I said that, okay, 2 lakh rupees dividend is distributed in total. So, if I talk about in the company point of view, we have distributed as a 2 lakh dividend. But this shareholder, Mr. X, how much dividend he will going to receive? So he holds, suppose, 100 shares in the company. Okay. And this 2 lakh dividend is distributed on 10,000 shares. For 10,000 shares, we have declared 2 lakh rupees dividend. So how much is for one share? 20 rupees dividend per share is declared. So how much a Mr. X will going to get? That is 20 rupees into 100, that is 2000 rupees will be the amount of dividend that the Mr. X will going to get. So what it is saying that dividend is basically it is that amount of profit which is not retained in the business and it is being distributed among the shareholders. One of them is Mr. X and it is in proportion to what? In proportion, this is proportion. Okay, this is in proportion to the amount paid up on shares held by them. So how I am going to calculate the proportion? That is, this is the amount of dividend into 100 shares out of 10,000. So this is the proportion. So he'll be getting 1/100th of the amount of dividend which is declared. That is only 2,000 rupees he will be getting as a dividend. So again, dividend in the literal term means the profit of the company that the company has not kept with himself and it is being distributed. It is that profit which is not kept with the company and it is distributed amongst the shareholders of the company. And how the distribution is done? In proportion to the amount paid up on shares held by them. So in short, that जितने amount का share basically उन्होंने खरीदा है, the amount of shares that the shareholder held, on the basis of that amount only the distribution of dividend or distribution of profit will be done to that individual shareholder. Okay. Now, we'll call this profit as a divisible profit. So, divisible profit means the profit which the law allows a company to distribute to the shareholder by way of dividend. So, there is like, okay, you might have noted this. I am erasing it. Okay. Done. Pause it and note it. Now, there are profit. This is a profit of company. Okay. That I have already told. Suppose it is 20 lakh profit, out of which 2 lakh is distributed as dividend and 18 lakh is retained in the company. So this 2 lakh is called as divisible profit. What is divisible profit? It means the profit that law allows that company to distribute to the shareholder by way of dividend. Okay. So here the law is allowing to distribute this 2 lakh rupees as a dividend to the shareholder, and this 2 lakh amount will be called as divisible profit, as it is also called as distributable profit. In the simple terms, it can be distributed to the shareholders of the company, and this retained earning, or you can say retained profit, that is a profit that will remain within the company, okay, for promoting objects of the company. Okay. Now, the profit of a business means the net proceeds of the concern after deducting the necessary outgoings without which those proceeds could not be earned. It says the profit of a business means the net proceeds of the concern after deducting the necessary outgoings without which those proceeds could not be earned. Now, what does this mean? It says that profit is equal to total net proceeds, means total earning of the company, or you can say turnover of the company, or you can say revenue of the company. Okay, in simple term, you can say revenue minus expenditure. So, and expenditure, what all expenditures are included? All those expenditures which are necessary to conduct the business, with the help of which you are earning the revenue. Suppose you are doing a business of like a retailer for a purpose of clothing. Okay, so you have to purchase clothes in order to sell them. So this is like you need to have a shop, you need to purchase the clothes, you have to purchase maintain the office lights or AC or all these things in order to maintain an environment, so that people will come and purchase those clothes, and then you can sell those clothes to those customers, and then you finally can earn the revenue. So before earning revenue, you have to do all these expenditure in order to get the profit, or you can say revenue. So the profit is simply revenue minus expenditure, in short. Okay, I hope you have noted this down. Okay, done. Now, next thing is, this is very important. It is the meaning of dividend. Now, the word dividend is defined under Section 2, Clause 35 of Companies Act 2013, which says the term dividend includes any interim dividend. What is dividend? It is not say the dividend means that or dividend means that. It is not a definition, not like that. Section 2, Clause 35 simply says dividend includes any interim dividend. So without going any further into anything, we just need to understand the meaning which is written here. Dividend includes any interim dividend. So after understanding the definition, I can tell you that dividend is of two types: final dividend and interim dividend. Oh, 1 second. Okay, final dividend, interim dividend. What are they? It is given at the end of the financial year. Okay, and it is given between the two AGM, annual general meeting. So it is given at the end of financial year, that is at annual general meeting, and it is given at between the two AGMs. That is, before declaration of final dividend, the interim dividend is declared. But why does the definition says dividend is a dividend which includes interim dividend? It says like this because it wants to tell you that the whatever law which is applicable on final dividend, the same law will be applicable on interim dividend. So there is no difference when it comes to the provision of law in both the types of dividend. So this is why the definition is given like this, because the everything which is applicable on final dividend will be applicable in a similar way on interim dividend as well. So it is an inclusive definition and not an exhaustive definition. That is, whatever written here is only that only, and it is not exhaustive. That is, any apart from dividend or interim dividend, no other thing will be considered as dividend. So it is like an specifically given that dividend means it includes an interim dividend, nothing else. Okay. Now, according to the generally accepted definition, if we talk about general definition, this definition was basically given under Companies Act. Now, this is the general definition. It says dividend means the profit of a company which is not retained in the business and is distributed among the shareholder in proportion to the amount paid up on shares held by them. We had already understood this meaning. Dividend means it is a profit of a company which the company has not retained and which is distributed amongst the shareholder in what proportion? In a proportion to the amount paid up on shares held by them. That we have said that Mr. X has 100 shares. So on the basis of that 100 shares, that Mr. X will be going to get the amount of dividend, amount of profit as a dividend to him. Okay. The next thing is that dividends are usually payable for a financial year. This is for final dividends. It says that dividends are usually payable for a financial year after the final accounts are ready and the amount of distributable profit is available. So it means that dividends are basically payable for a financial year. That I already said that it is payable at the end of the year, but when after the financial accounts are final accounts are ready and the amount of distributable profit is available. So basically, I had already told you this. One second. That the dividend, final dividend, is paid at the end of financial year after financial statement, or you can say final accounts are approved, or you can say ready. Okay. Plus, third thing was written that, and once the P&L is also ready and the profit of the year is available with you, because we are going to distribute the dividend out of this only. Okay. And the next thing says that dividend for a financial year of the company is called final dividend. Okay. So the dividend for a financial year is called as final dividend. It is payable only if it is declared by the company. Note here, it's very important. Only when it is declared by the company, at its annual general meeting, that is AGM, on the recommendation of board of director, till here. Okay. And sometimes, now till here it is for final dividend. What it says, let me make you understand with the difference also. We are going to differentiate all together here. Okay. Final dividend, interim dividend. Now it says, first thing, it is recommended by board of directors, and on the basis of that recommendation, it is declared by shareholders at annual general meeting. Okay, simple. Note this down. Done. And also it is payable at the end of financial year when the financial statement is approved. Okay. Now, moving further, it says sometimes dividends. Now from here it is interim dividend. Okay. It says sometimes dividends are also paid by the board of directors between two AGMs without declaring them at an annual general meeting, called as interim dividend. Again, it is recommended and declared by board of director. One second, sorry for my writing. Declared by board of director. So both recommendation and declaration both are done by board of director, and it is declared at the end of financial year when financial statement is approved at the AGM. Okay, and here it is basically like declared between two AGMs. Okay. Now note this down. Done. Moving further, the company which have a license under section 8. What is that company? Formation of company with charitable purpose. Now section 8 companies are prohibited to distribute the dividend to its member, and because they have to apply their profit in promoting the objects of the company. So section 8 company are not allowed to distribute the dividend. Okay. Now before moving further, I'd like to discuss interim dividend here only. Now again, interim dividend means according to section 2 clause 35, dividend includes interim dividend. Now according to section 123 subsection 3, board of director of a company may declare if they want. It is not a compulsion. Okay. Now understand two things. Difference between may and shall. Shall makes anything mandatory. If anywhere it is written, if here suppose it is written, board of director of company shall declare, then it will become a mandatory thing on board of director to declare interim dividend. But here the word may is written, which says it's an optional. So if board of director wants, they may declare the interim dividend. It's not a compulsion, it's an optional thing. Okay. So board of director of a company may declare interim dividend during any financial year or at any time during the period, means during any financial year, that is when the financial year is not even ended, between the financial year. Suppose if it is declared between 1st April to 31st March. So if in between this is declared for the particular financial year only, suppose if it is declared in 2020 for 2020, that we are here in August. Okay. And the like for year financial year 2021, any dividend is declared on August, then this dividend will be called as interim dividend, as we have not prepared with the financial statement for the year 2021. We have prepared for 1920 right now. So if we are giving the dividend for this current year, then that will be considered as interim dividend. Okay. Or at any time during the period from the closure of the financial year till the annual general meeting, out of the surplus. Okay, second point is said that either you have declared during any financial year, or like your financial year end on 31st March 2020 and your AGM will be on 30th September 2020 and you have declared on August and it is declared by the board, because the final dividend is obviously always declared at annual general meeting by the shareholders. So here if it is declared by the board and it is before the commencement of annual general meeting, then and the out of what means how you are like what is the source of the dividend. The source of the dividend is out of the surplus in the profit, that is the extra profit that you have, okay, or out of the profit of the financial year for which the interim dividend is sought to be declared. Okay, so this is the sources which is written, which says either of from the surplus in the profit and loss account. So if the company's profit and loss account you have, then if you have shown the profit under this, so either from that profit you can distribute, or second point comes here, it says out of the profit of the financial year for which interim dividend is sought to be declared. So suppose like we are talking about 2021, so till the time August time, if you have any profit in the company, so out of that profit also you can declare basically the interim dividend, or if out of the profit generated in a financial year till quarter preceding the date of declaration. So suppose if the date of declaration is 30th August, so the quarter ending before this, what the language it says, basically read this: out of the profit generated in financial year till the quarter preceding the date. So preceding this date on which the dividend is declared, date of declaration, the preceding quarter will be April to June. So till that June, whatever profit the company has, suppose if the company has certain profit during this time, so out of this profit the interim dividend can be declared. So what 3 point it says, I just want to write it down here. You can note this and I'm going to delete this. So it basically says in source of interim dividend. Write it down. It says first point, out of surplus in profit and loss account of the company. Okay, profit and loss account, or out of profit of the financial year for which it is sought to be declared. So out of profit of financial year 1920, okay, for which it is sought to be declared. So if it is declared for 1920, then profit of this, or if it is for 2021, then it is for that. Okay, that you can say for current year, current financial year, profit of current financial year. Okay, or if the year is not been passed, if 1 year is not been completed, if you are declaring before ending of the financial year, okay, then out of the profit generated in a financial year till the quarter preceding the date of declaration of dividend. Okay. Done? Okay. I just want to read out this point again. It says, according to section 123 subsection 3, the board of director of the company may declare interim dividend during any financial year. So it can be declared when it can be declared during any financial year or at the time during the period from closure of financial year till the AGM of the company. Okay, so there are two things was given that when the, so you can answer the two questions from this. When interim dividend can be declared. Note it down. When interim dividend can be declared. Write the answer. It can be declared, first point, for during any financial year. Okay. Or second point, at any time during the period, at any time during the period from the close of financial year till AGM. I had already explained this 2 point very clearly to you. Okay. And sources we have already noted down. Okay. So third point says that however in the case of the company which has incurred loss. Now this was the point where the company has adequate profit. Then how the interim dividend will be distributed. But when the company has inadequate profit, then we'll refer to this point. If the company has incurred loss during the current financial year up to the end of the quarter immediately preceding the date of declaration, that I had already told, that if the April to June and we are standing on 30th August. So if during this time you have any loss, then what will happen? Then such interim dividend shall not be declared at a rate higher than average dividend declared by a company during immediately preceding 3 financial year. In that case, you have only obligation on rate of dividend. It's not given that you cannot like distribute dividend. It is only an obligation that you have to not exceed the rate of dividend beyond the average rate of dividend declared immediately preceding three financial years. So note this down. And what does this line means? It says basically, one second. Let me erase the thing which is written above. I hope you have noted it. Okay. Done. Pause it and note it. Now, I am explaining this line. Okay. Interim dividend shall not be declared at a rate which is higher than average dividend declared by the company during the immediately preceding 3 financial years. So suppose we are standing on a financial year 1920. So preceding, that is previous years, from which will be calculating from the year in which we are standing, for which we are basically calculating. So preceding years for this will be, first preceding year will be 1819. Okay. Second preceding year will be 1718 and third preceding year will be 1617. Okay. So now if I am going to talk in this sense, so let us see the thing. Suppose here the rate was 10%, here it was 5%, here it is 15%. Okay. So I need to take an average of these three. So average will become 30 by 3, that is 10%. So the rate of dividend, in case if I am not having adequate profit in this year, then the rate of dividend should not exceed 10%. So the maximum rate of dividend can be 10%. I cannot go beyond 10%. So board of director may declare the interim dividend, may recommend and declare. So there is no twice board meeting. Board meeting will be done only at once, where the declaration will be done. And in the case of final dividend, the board meeting is done twice. First, it is being recommended and then they had conduct the board meeting to hold the annual general meeting, and in annual general meeting the final declaration for the dividend is being done. But in case of interim dividend, the board of director will hold a single board meeting in which they will recommend and declare the interim dividend. Okay, now let us see the next thing, which is source of dividend. Now this is for basically final dividend. Section 123 comes here into the picture. It says, according to section 123 subsection 1 of the act, dividend can be paid by the company out of the profit of the company for that year arrived at after providing for depreciation in accordance with provision of subsection 2. What it says basically, source of dividend, it says it can be paid out of current year profit of the company, current year profit of the company after deducting depreciation as per Companies Act. Okay, depreciation. Okay, second is out of previous year profit of the company for any previous financial years or years arrived after providing for depreciation. That providing means after subtracting, or you can say deducting depreciation for in accordance with the provision that subsection, and remaining undistributed dividend, or both. So it says out of profit, previous year profit of the company after deducting, this is depreciation is current year depreciation. Okay, after deducting current year depreciation or unabsorbed depreciation. What is unabsorbed depreciation? We have all studied in income tax that depreciation is being deducted out of the profit every year. And sometime what happens, suppose in the previous year there is like a profit of 20 lakh, or you can say 2 lakh for simplicity, and you have a depreciation of 2,30,000. So this 30,000 is your unabsorbed depreciation, because you cannot utilize this depreciation to be deducted out of the profit of the company, because the depreciation, after deducting depreciation, you will be able to after deducting depreciation, the profit that you get, the interest will be the taxes will be charged on that profit only. So the depreciation is basically like a tool that helps you to reduce your taxes also. So that's why the depreciation needs to be absorbed completely. Okay, so if any unabsorbed depreciation of this previous year is left, then it needs to be deducted out of the next year's profit. Okay, so this 30,000 will need to be absorbed in the next year profit. So it says that out of either you can distribute dividend out of current year profit, profit minus depreciation, or out of previous year profit minus any current year depreciation or any unabsorbed depreciation. Suppose a company has both current year depreciation and unabsorbed depreciation, then the both will going to be first of all deducted out of previous year profit, and whatever amount left, then that whatever lefted amount will be considered for the purpose of distributing the dividend. Okay, and third is out of if it is a government company or in any such other case where the government company helping the company to get the shareholders or investments from the shareholder, then in such a company the central government may provide the money for the purpose of the payment of the dividend to the company in pursuance of any guarantee which is given by the company. So nowadays in a startup company, government may also purchase some stake in order to the promotion of startup companies, or if it is a part of a government company, suppose in railways or something, so they may give the money for the purpose of payment of dividend. So third point is that, but generally this is 2 points which is there, that is out of current year profit of the company after deducting depreciation, out of previous year. Second is out of previous year profit of the company after deducting current year depreciation and unabsorbed depreciation. Okay. Now, there are certain proviso to section 123 which says, first it says that provided that the company may before declaration of the dividend will transfer such percentage of its profit as for that financial year to the reserves of the company. So earlier there was certain limit of the like percentage which was mandatory, that out of the profit this much percentage you need to transfer to a reserve as your retained earning. But now it is on the company, it is given to the company that they can distribute the profit like transfer certain percentage of profit to the reserves, and that percentage can be decided by the company itself. And if that percentage is decided by the company as per its article or something, so first that transfer need to be done, and after that transfer only the company will need to distribute the profit about the means after lefting with that amount. For example, let me like clear this out, note it down. Okay, done. Like this is the profit of the company, 1 lakh. If the company as per its article will transfer to reserve for 10%, so suppose now here 10,000 need to be transferred, then this 90,000 amount is available for the distribution of dividend. Okay, so this is what this says. So that is before distributing the dividend you have to deduct that particular amount which you have to transfer to reserves of the company. Now provided further that we are owing to the if there is an inadequate profit, then the company will have to declare the dividend out of the accumulated profit which they had earned in previous year, or out of the money. Either they can, if in the current year if the profit is not sufficient, so either they can basically declare the dividend out of the previous year profits that we have already seen, or either they can declare the dividend out of the money that they had already transferred to free reserve in previous years. Okay, and such declaration of dividend shall not be made except in accordance with the rules as may be prescribed. So whenever the dividend is transferred out of the money which is kept in free reserve, it is to be declared by compliance with the rule 3 of company's declaration and payment of dividend rules 2014. Only after compliance of these rules they will be able to distribute the dividend in case of the company has inadequate profit, plus the company is not using the previous year profit, but it is using the amount which is staying in free reserves of the company. Okay, and third is, now we're going to see that process in the next class. Now the third provision is basically also that no dividend shall be declared by the company from its reserve other than free reserves. So out of all the reserves that company made, there are many reserves that company make, like statutory reserves like security premium account or capital reserve, CRR, capital redemption reserve, and free reserve. So out of all the reserves, only free reserves can be used for the distribution of dividend. And also this provision is not applicable to government company or deemed government company, provided also that no company shall declare dividend unless the previous year losses and depreciation has been set off against the profit of the current year profit. So before declaring the dividend out of current year profit, they need to set off all the previous year losses and depreciation and unabsorbed depreciation, and the amount left after this can be used for the purpose of distribution of dividend. Okay, now we are done with today's class. In the next class we are going to discuss the procedure in case of inadequate profit, how the dividend is declared, and procedure for declaration of dividend, and some other provision as well. So please revise this lecture before moving towards next lecture. Thank you.